Okay, dear students, this is your F7 FR trainer, Mustafa Mirchawala from Mirchawala's Hub of Accountancy. And today we are here for revision days for September 2023 attempt, right? As we all know that exams are near, so definitely we all have to work hard and treat this class as a revision, like you are preparing for your exams, right? Okay. And just for your motivation, definitely these are tough days. Last days are tough days. There are people who say negative things in these days. So just for your motivation, I have on the screen you can see the latest result. It's not 3 years old or 4 years old or 2 years old result. It is the latest, very latest June 2023 attempt results. So you can see the scores, and these are scores from different part of the world, like UAE, UK, in India, Nepal, Saudi, are different countries are there, Qatar. So when these students can score, you can also, because they studied from the same lectures, same teachers, same strategies. They availed the same marking facility. I hope you all know that we provide marking facility for ratio analysis, because there are some students, there are many students, they feel difficulty in ratio analysis because its commentary is a theoretical part. So in my classes, in my LMS, in my learning management system, I have covered many questions of ratio analysis, but still I feel this, that you guys have, it should be a two-way traffic. So you should solve the question, you should send to me, and then we'll mark it, right? Okay. So marking facility is always there. So it's a request to avail the marking facility. If you want to score good. For your benefit, we have created a WhatsApp group. Yes, already there are some students, they have already been added to WhatsApp group, but those who are not yet added in WhatsApp group, in the chat box, I have sent the link. Our admin has sent the link. Kindly join that WhatsApp group. My dear students, those who are listening me, those who are watching me, please join the WhatsApp group. The WhatsApp group link has already been sent in the chat box by our admin. Okay. So I would say that majority ACCA training webinars, they say that the reason of failure for students in skills module is section C. So please give more time on section C, especially solve questions on the software, real software, ACCA software, right? Solve past papers on the software with timer, like time bounded. Okay, so that in the exam you will be able to perform. If you do solve on the paper and pen, then most probably you will have difficulty in the exam, right? So try to solve questions in real exam environment. One more question students ask, that should we attempt section C first? I would say no. Why? Because in section C there is 20 marks ratio analysis or interpretation question, and normally interpretation question is like a big ground. There are a lot of things to speak in interpretation questions. So when a person starts writing on interpretation, sometimes they write too much. This is normal behavior, they write too much. So if you write too much, that means you have consumed, you have given, you have allocated more time to ratio analysis. So that means you have less time for other MCQs and MTQs. So it's better to solve the paper in order, right? Okay. Still highly recommended to solve mock exam and make a planner. I have sent messages to you. Make a study plan, calculate your variances. Like, it is recommended that you should complete the course by 15th of August. By 15th of August, you must complete the course. You must complete the course by 15th of August. By 15th of August, right? Okay. So still you have some time, but 15th of August, so that after that you can read examiner report, which is very, very important. Examiner report is super important, right? Read examiner report, read articles, solve mock exam, watch revision days, all these things, right? Yes, the session is recorded. Obviously it's recorded because hundreds of students will listen after this class. Everybody can't, all the world cannot watch it at one time because there is a time difference in the world. But those who are attending live, they should attend live. Okay, right? So in front of you, it's the latest past paper. It's the latest past paper of March, June 23. This is March, June 23, the latest past paper, which is recently released like 10 days before or something. So I decided to cover this past paper with you guys. Okay. And normally they give section C, they disclose section C only, right? So this is final account question. In the final account question, you first have to see, you first need to check in the final account question. You first need to check the accounting period end, So your accounting period end is 31st of December X5. Your accounting period end is 31st December X5. All of you, please, it's a request to just dive in this class. I will say sometime in Hindi language, डूब के पढ़ो, डूब के पढ़ो. Okay, in this class today, I'll use some Hindi words, Urdu words as well. But at the same time, I'll speak that thing in English as well. So don't worry. Now, so your accounting period is 31st of December X5. Your accounting period is 31st of December X5. Now, this is your trial balance. And the good thing is they are saying draft profit before tax. Draft of profit before tax is there. PBT is there. That means already some work has been done. Now I'm going to teach you one identification technique, excellent identification technique. In this PBT, many things are included. Many things are included except few. Wait. This is PBT, right? PBT. Now use your brain. Can you see sales in the trial balance? The answer is no. That means sales is already included in this PBT. Can you see cost of sales in the trial balance? No. That means cost of sales is also included in the PBT. Can you see operating expenses in this trial balance? The answer is no. No. That means operating expenses are also included in this PBT, also netted off. So things which are not written in the trial balance, that means it is included already in the PBT. Income statement items. I'm talking about income statement items. Okay. So this is how we recognize it. So many things are included in this PBT. But yes, again, we have to see the adjustment. Now, what will be my approach? Listen, my approach. First of all, I'll solve this question roughly with you guys in a normal style, in a normal teaching style, right? And then I'll shift to the spreadsheet and I'll solve complete question on a spreadsheet, but that won't take time. The spreadsheet thing will go a little fast, but this thing we'll get the concept. Okay, so let's start. The draft profit before tax figure in the above trial balance has been calculated before any adjustments that may be required from notes 1 to 5. Notes 1 to 5 below, right? The following information is also relevant. Now let's start. The first thing is IS 16 and a little bit of IS 12 deferred tax, IS 12 income tax, but the deferred tax part. Okay. Until 1st of January X5, 1st January X5 means the beginning of your year, the beginning of your accounting period, because December X5 is the year end. Until 1st of January X5, Splish company held land and building at cost. On 1st January X5, Splish company had them valued at 250 million, of which 80 million related to the land, right? That means the market value is 250. Out of this 250, 80 million related to land. That means 170 related to building. Okay, these are the market values. That means revalued to. Market value means revalued to. Okay, now no entries. See, open your eyes. No entries have yet been made to incorporate this valuation. So accountant has not done the revaluation so far, and this is the case. Listen, you have done these before. This is the case of beginning year starting revaluation. Revaluation at the start of the year. Sometimes in your exams, in your past papers, you have done this case that sometime revaluation is done at the end of the year. But here revaluation is done at the beginning of the year. So what we'll do, look at me. First, we'll revalue the asset and then we'll depreciate it. But be careful, we will only revalue, we will revalue both land and building, but we'll depreciate only building. We will be depreciating only building. Okay, so see the life, the buildings have a remaining useful life of 20 years, so we'll depreciate the building, don't worry. But I can give you depreciation in seconds. The new depreciation should I give you? 170 is the market value of building. 170 million is the market value of building. So the market value divided by remaining life. Market value divided by remaining life. Use your calculator. 170,000. 170,000 divided by 20 years. 170,000 divided by 20 years. It will give you 8,500. Okay, so 8,500 is the depreciation expense for the year. Obviously use your brain. When this accountant has not yet recorded, this accountant has not yet recorded the revaluation, so obviously they have not done the depreciation as well. So depreciation we need to adjust, and yes, the depreciation will be adjusted in profit. The depreciation is an expense, so it will ultimately reduce your profit. Okay, so this thing we'll do, don't worry. Now deferred tax on the revaluation is calculated at 20%. The very famous entry, the famous entry. Remember, deferred tax on revaluation we have to do. Deferred tax on revaluation we have to do. Don't worry, I'll teach you. One more thing. Splish company has a policy to make annual reserve transfer. Annual reserve transfer. You remember this entry, famous revaluation reserve debit and retain earning credit. Remember this entry for extra incremental depreciation. This entry is made to cancel the effect of extra incremental depreciation. Hope you remember the class. Right? Okay, so we have to make this entry as well. Prior to the revaluation of the building, the building were depreciated over, look at me, being depreciated over 50 years on a straight line basis. This is for the old depreciation. Listen, the old depreciation is done on a straight line basis. Why they are giving you old depreciation? Because this entry, hope you remember the rules. This entry is basically made by taking the difference between old and new depreciation, old and new depreciation. Okay, so we'll calculate both. But be confident and relax. Treat yourself as a winner. Now, see this. They are saying, first of all, your land and building at cost. 200,000 is the land and building cost, including land is 50 million. That means the cost of building, the building cost is 150,000. The building cost is 150,000 and land is 50,000. These are the original cost. But don't forget, building is a depreciating asset. Don't forget, building is a depreciating asset. Okay, so there is an accumulated depreciation. There is accumulated depreciation for building as well. Yes, here you go. So 90,000 is the accumulated depreciation for building. So 150,000 is the cost and accumulated depreciation for building is 90,000. Can anybody of you tell me 150 minus 90 is 60? So right now, at the beginning of the year, the NBV for building is 60,000. The NBV of building is 60,000. Okay. Now don't worry, let me move the screen. But I would request you, if you guys want to take the picture of question, you may. If you guys want to take the picture of the question, you may, so that you will have question on one screen. It will be effective for you. Okay. Let me cover it for you. Listen. See this. Building. Okay, so the cost of building is 150,000. The cost of land is 50,000, right? But don't forget that building is a depreciating asset. So 150 minus 90, this is 60,000. Okay, NBV. Now, just use your brain. Buildings revaluation is done using NBV. Definitely it will be compared with NBV. What is the market value? What is the market value of building? The market value of building is 170,000, and the market value for land is 80,000. Okay, so 170 plus 80 is 250. We just saw in the question. Okay, now what will happen? Look at here. Revalued by building will be revalued by the difference of 60 and 170. This difference of 60 and 170 is 110. Building will be revalued by 110, and your land will be revalued by 30. So in short, there is a total upward revaluation. There is a total upward revaluation of 140,000. Keep this thing in mind. There is a total upward revaluation of 140,000 initially. Okay. Now, just use your brain. Which part should be depreciated? Building should be depreciated or land? Building should be depreciated or land? Obviously, building. And how to calculate depreciation of building? Depreciation building for December X5, it's very simple. The new market value divided by remaining life. The new market value divided by remaining life. So this is 8,500. So can anybody tell me the final NBV at 31st December X5? So it's done. 170,000 minus 8,500 is, I think, 161,500. And we all know we don't depreciate land. So see, these two numbers will go in SOFP. The SOFP number is done. The SOFP number is done for land and building. The SOFP number is done for land and building. Okay. Now one more thing. There is a concept which is called deferred tax on revaluation. Deferred tax on revaluation. These two are, listen, this and this, these two are upward revaluation. So we have a 140,000 upward revaluation. In short, let me give you a shortcut entry. Land and building debit by 140,000 and revaluation reserve or OCI credit by 140,000. Okay. Now what we'll do, if you remember the classes, you will go to the tax department. You will say, see, we have a gain. But the tax department say, no, we don't charge any tax now. We don't charge any tax now. But yes, as the value has gone up, so we'll charge tax in future. So in future, we have to pay tax. So it's a DTL, deferred tax liability, which is 20%. So what will be the entry? 140,000 times 20% is 28. So revaluation reserve debit 28,000 and DTL credit 28,000. Revaluation reserve debit 28,000 and DTL credit 28,000. So now one more thing. Just think, this 140 and this 28,000, the net amount. What is the net amount? The net amount is 112, I think. 112,000 will go in Soshi. 112,000 will go in Soshi. As in this question, there is no SOCI. In this question, there is no SOCI. We don't have to make complete SOCI. So 140 minus 28 will directly go in SOCI, statement of changes in equity. Okay. Now, as a student, you may ask one more question. Sir, what about the incremental depreciation entry? What about the annual transfer entry? Incremental depreciation entry. Wait, it is very simple. This is your new depreciation. See, this is your new depreciation. And let's see where is your old depreciation. Old depreciation. Hope you remember the question. I just moved the screen. For old depreciation, it should be on cost. Old depreciation life 50 years on cost. 50 years on cost straight line. So this is the original cost. Beautiful students, look at here. This is your original cost, which is 150,000. And your original life is 50 years. So your old depreciation was 3,000. Your old depreciation was 3,000 per annum. And what about the new depreciation is 8,500. Old depreciation is 3,000. New depreciation is 8,500. What is the extra? What is the extra or incremental depreciation? 5,500. Yes. So you will be making one entry. Revaluation reserve debit 5,500 and retain earning credit 5,500. I hope you remember by now because this is the last month. This entry will also go in Soshi. This entry will also go in Soshi, right? This entry will also go in Soshi. And you know, there is one more technique. There is one more technique to calculate this entry. This 5,500 may come with one more technique. You tell me this entry relates to building only, not land, because land is never depreciated. Land is never depreciated. Land is never depreciated. Only building, only building. So look here. So the building revaluation reserve is 110. Revaluation reserve related to building is 110,000. Revaluation reserve related to building is 110,000. Just simply take your calculator in your hand, all of you. 110,000 divided by remaining life is 20 years. 110,000 is the revaluation reserve of building divided by new remaining life is 20 years. It will give you 5,500. It will give you 5,500. This is one more technique. This is one more technique. So both things are perfect. Both things are perfect. Both things are perfect. Old depreciation minus new depreciation, or you can do like this way. Okay. So giving you 30 seconds to fix this thing in mind. No need to copy. We'll share the slides after the class. Fix this thing in your mind, please. Okay. Now, the next thing, what will go in the income statement? In income statement, only 8,500 depreciation will go. In income statement, this new depreciation will go. This thing will go, this net thing, 140 minus 28,000. 140 minus 28,000 will go in Soshi, that is 112. And this entry will also go in Soshi, right? And yes, these two numbers will go in SOFP. But don't worry, I'll solve everything for you in the spreadsheet once again in a formal way, right? This is just for your understanding. Now there is one more super hit transaction, one free marks. I call it free marks of plant and equipment. Plant and equipment reducing balance depreciation is very, very famous. The one free mark for you, enjoy it. See, they are saying plant and equipment is depreciated at 15% per annum using reducing balance method. Easy, reducing balance method, simple. See, what is reducing balance method means percentage on NBV. Reducing balance method means percentage on NBV. So first calculate the NBV of plant. The cost of plant is here. The cost of plant is 320,000. The cost of plant is 320,000. And accumulated depreciation is 111,200. Accumulated depreciation is 111,200. Accumulated depreciation is 111,200. So what is the NBV? NBV is 208,800. Now simply your depreciation plant will be 15% of NBV. 15% of NBV, this is easy. This is easy, to be very honest, this is easy. Is 31320. 31320, right? So what is the NBV final? What is the final NBV? Sorry, it's somebody misguided me. What is the 15%? First tell me. 208,800 times 15% is how much? What you are doing? It's 15%, yes. 31320. Sorry. 31320, right? What you guys are doing, please tell me. 208,800 multiplied by 15% is how much? 177,480. 177,480. 177,480. Right? Now, simple terms. This is nothing. This is basic F3. This depreciation will go in the profit reconciliation. This will reduce your profit. This 31320 is the depreciation which has not yet been recorded already. So it will reduce your profit. And yes, this thing will go in the SOFP. This thing will go in the SOFP. So see, I have already explained you here. Please don't waste time when I'll be on Excel. Okay, be active at the time of Excel. So by now we have done the first adjustment. Hope you understood it. Hope you understood the first adjustment. Hope you, let me send you the question. All of you wait. Let me send you a question on the WhatsApp group. Let me send you the question. Forwarded the question on the WhatsApp group already, right? So now relax. Just give me one answer. Did you guys understand this first adjustment? Did you guys understand this first adjustment? Obviously, yes. Obviously, yes, because if you have attended the classes, all these things were covered. The next adjustment is again easy adjustment, and this is IS 21. IS 21. Hope you remember about the monetary items like receivables and payables. For monetary items, what is the rule? First, listen the rule. At the date of transaction, first you record the transaction using the exchange rate of the date of transaction first, and then at the time of payment, like receivable or payable, in terms of receivable you receive the payment, in terms of payable you pay the payment. Remember? So you see the exchange difference at that time, and all exchange gain or losses of monetary item goes in P&L. All exchange gain and losses of monetary item goes in P&L. All exchange gains of monetary items goes in P&L, right? Okay, so let's do it. Let's read it. It's about payable. And do it with confidence. Listen, they are saying on 31st October X5. First, keep the accounting period in your head. Accounting period is 1st January X5 to 31st December X5. 1st of January X5 to 31st December X5. 1st January X5 to 31st December X5. Now what they are saying, on 31st October X5, 2 months before the year end, Sphinx company acquired inventory from an overseas supplier on credit. There is a trade payable for 40 million dinars. See, the currency is different. Our currency is dollar. Here dinar is written. The invoice was paid in full on 25th January X6. Means the invoice is paid after the year. Means the invoice is paid after the years. Means the invoice is paid after the year. That means at the year end, it is unpaid. By the end of 31st December X5, it is unpaid like this. See, our year end is 31st December X5. Okay. The transaction initiated at 31st October X5, this date, and paid in January X6. So that means at 31st December X5, it is unpaid. It is unpaid. So what the rule says, first you have to record it. First, you need to record the transaction at 31st using the exchange rate at 31st December October X5. First, you need to record the transaction using exchange rate at 31st October X5. Then you need to reassess your liability here. Then you need to reassess your liability here at 31st December X5, at 31st December X5, right? Okay. This is what we have to do. So we need to calculate exchange gain or loss. Exchange gain or loss. It is very, very easy. Just a little active mind is needed. See, it is 40 million dinars. Sphinx company had correctly. See, this is very important. In my classes, I sometimes cry. For this thing that the most expensive thing in all paper is identification. The most expensive thing for all the papers is identification. If your identification is strong, you can score good. You need to identify what work has already been done by the examiner and what you have to do. This is the key point. During practice, invest your time on this thing. Sphinx company has correctly recorded the purchase on 31st October X5, but no further entries have been made at the year end. So initially, yes, they have recorded using this exchange rate. Using this exchange rate, they have already recorded. Okay. So just year end adjustment we need to do. Easy thing. 40 million dinars. And what is the exchange rate? $1 is equal to 4 dinars. $1 to 4 dinar. So 4 dinar is equal to $1. So now we are going to shift from dinar to dollar. So we'll be shifting to a lower number. We'll be shifting to a small number. So we need to divide. So it's very simple. Look here. See this. 40 million divided by 4. Initially, the liability was $10 million. Initially, your liability was $10 million. And at 31st December X5, your liability 40 divided by now exchange rate is 5. Your liability is now $8 million. Your liability is now $8 million. So just think over it. Your liability went down. In dollar terms, your liability went down. So it's a good news. Going down of liability is a good news. So the entry will be your payable debit. 2 million means 2000. 2 million means here 2000 and P&L credit 2000. That's it. So you just need to post this entry, nothing else. You just need to post this entry. That's it, nothing else. Yes, this income will go in the profit reconciliation. This income will go in the profit reconciliation. Ultimately, it will increase. It will increase your profits. And yes, the payable is going down. This is your current liability. So it will be adjusted in SOFP. This payable thing will be adjusted in SOFP. Okay. So this is how we'll do it. And definitely we'll do it on spreadsheet. Don't worry. I'll teach on spreadsheet as well. Okay. Now, one irrelevant data. I always say sometimes they give you irrelevant data. See, this is irrelevant. This 25th January X6 exchange rate is irrelevant. This is of no use. This is of no use, students. This is of no use. Just irrelevant data. Now, adjustment number 3. Just 3 adjustments are left and they are not big one. Adjustment number 3. Interest on loan note is paid every 6 months. 6 months. With next payment due on 1st January X6. See, next January due on 1st of January X6. That means 1 day after the year end. 1 day after the year end. The draft, now see the $1 million line. The draft, read the lines, read between lines. The draft profit before taxation figure in the trial balance includes, means already booked, includes means already booked, first interest payment on the 7% loan note made on 1st July X5. Just relax and read it. There is a simple meaning. To be very honest, it has a very simple meaning, simple meaning. No double meaning. Let me explain you. See, this is your complete year. 1st January X5 to 31st December X5. 1st January X5 to 31st December X5, right? And first interest payment is made on 1st July X5 for these 6 months. And this 6 months has already been recorded in the income statement as well. These 6 months has already been recorded in the income statement. They are saying already been recorded. And about this 6 months, listen, this 6 months interest will be paid just 1 day after the year end. That means on 1st January X6. On 1st January X6. 1 day after the year end, that means on 1st January X6. So these 6 months interest has not yet been recorded. Plus it should be accrued. It should be accrued. It should be accrued. So half year interest is accrued and we have to make the entry or adjustment for that. Entry or adjustment for that. Okay. Let's see how much is the loan. Let me move the screen. We'll see it. Don't worry. See, this is the loan note. This is the loan note. 30,000 is the loan note. 7% is the interest rate. 30,000 is the loan note. 7% is the interest rate. So how it works? See, 6 months. If I want to calculate 6 months interest, it will be 30,000 loan times 7%, 2,100 into 6 upon 12. It will be 1050. Okay. 1050 is the 6 months interest. And if you guys want to make entry is not needed in the examiner solution. There is no entries. If you want to make the entry will be interest expense debit 1050. And as this interest has not yet been paid by the year end, because after 1 day of the year end, it will be paid. So accrued interest or liability, accrued interest, or you call it liability, will be credited. Just we have to post this entry. Just we need to post this entry. And how to post this entry? This interest expense will reduce your profit. This interest expense will go in the profit reconciliation and it will reduce your profit. And this accrued interest is your current liability. This is your current liability. It will go in the SOFP. It will go in the SOFP. Take your time. Take your time. Okay. Now, next thing. Oh, I hope you are understanding. I hope you are getting each and everything. Now, this is the most super hit entry. Tax. A provision for income tax of 30 million. This is current tax. Current tax provision is required for the year end. Okay, this is expense. You remember you guys used to make the packet. You guys used to make, when I teach in the class, I make the packet for tax. So current tax is your expense. Current tax provision of 30 million means 30,000. This is one of your expense. Then the balance on current tax represents under over provision of tax for the year ended 31st December X4. For the year ended 31st December X4. 31st December X4. Listen, we need to check under over provision. You know, you all know under provision is expense and over provision is income. Under provision is expense, over provision is income. Over provision is income. Under provision is expense, over provision is income. So under provision comes on the debit side of the trial balance and over provision on the credit side. Let's see the trial balance. All of you, let's go to the trial balance. It's on the debit side. It's on the debit side. That means it's under provision. It's under provision. So it's an expense. Okay. So I would add under provision 2500. There is no discussion on deferred tax here. There is no deferred tax balances, no opening, closing balances, just deferred tax on revaluation is there. Just deferred tax on revaluation, which we made the entry and we'll post it. Don't worry. So you have your total tax expense of 32,500. You have your total tax expense of 32,500. And yes, as this is your expense, it will reduce your profit. First 30,000, then 2,500, or you can combine post 32,500. One more thing. This year current tax is paid next year. This year current tax provision is paid very next year. So it's your current liability as well. Only this thing. Only this thing is your current liability. Only this thing is your current liability as well. So it will go in your SOFP. Are you getting? Are you getting? If yes, then please write in the chat box. If yes, then okay, dear students. Now note number 5, again with identification. Note number 5 is the game of identification. Hope you remember the right issue transaction, and there are two types of right issue transaction which comes in exam. There are two types of right issue transaction which comes in exam. There are two types of right issue transaction which comes in exam. Listen, the first transaction is when you have to record right issue right from zero. That means accountant has not yet recorded. Accountant has not yet recorded the right issue. Accountant has not yet recorded the right issue. In that case, you have to record from zero. But see, this time the transaction is different. This time the transaction is different. Open your eyes and read the transaction. On 1st September, X5, Sphinx company made a 1-for-5 right issue at 1.25. This is issue price per share. Now, the right issue, the golden lines, the right issue was correctly accounted for on 1st September. X5 already accounted for. And the shares are included in the trial balance above. That means they have already recorded. So now you need to do reverse working. This is the reverse working. You need to do the percentage game, already been recorded. Hope you remember some questions of your exam kit. Hope you remember some questions of your exam kit already recorded. Okay. And 1-for-5 means 20%. 1-for-5 means 20%. So don't worry about it. I'm here with you. So now go in the trial balance. This is your share capital with face value of 1. And this is your share premium. Both numbers are closing. Both share capital and share premium are closing numbers. Don't forget this. This is closing numbers. So we need to do reverse working and we need to calculate opening numbers as well as right issue entry. As a student, you may ask one good question, sir, why we need to go reverse, and when they have already recorded it, when they have already accounted for it, recorded it, why you are going reverse working? Why you are going to calculate opening balance and right issue entry? Because in this question requirement, we have to prepare SOSHI right from zero. We have to prepare SOKI right from zero. And yes, in SOKI, you have to report right issue. Hope you remember, basic students. Let me show you. See, this is 31st December X5, and your ordinary share capital is 120,000. Your premium is 5,000. Now just use your brain. Let me teach you with maths. This is opening OSC. This is right issue. And this is closing OSC. Okay. Now percentage and dollars. Opening we don't know. Closing is 120,000. Closing is 120,000. Okay. Now at the year end, anything total balance is 100%. Anything existing total is always 100%. So at the year end, already 100% shares were issued. And during the year, you guys did right issue of 1 for 5. 1 for 5. 1 for 5 means 20%. So 20% new shares were issued. So 100 plus 20 at the year end, you are at 120%. At the year end, you are at 120%. 120%. Now, can you calculate the opening balance and all? Yes. 120,000 is equivalent to 120%. 120,000 is equivalent to 120 pieces. So you will divide 120,000 divided by 120 and go to 100. This is 100,000. And the midline is it's 20,000. So in simple words, 20,000 shares are issued. 20,000 right shares. 20,000 right shares are issued. 20,000 right shares are issued. Okay. And now wait, what is the issue price? Issue price per share is 1.25. Issue price per share is 1.25. You go in the trial balance and check the face value is 1. Face value or par value is 1. Point 0.25, 0.25, 0.25, 0.25. 0.25 is the premium. 0.25 is the premium, right? Okay. So can we make the entry for right issue? Yes, we can make the entry. Yes, we can make the entry. 20,000 shares. 20,000 shares multiplied by issue price is 1.25. 20,000 multiplied by issue price, you receive the cash. It will give you bank debit. Bank debit 20,000 into 1.25 is 25,000. And now whenever we issue shares, share capital is increased, and share capital is always recorded at par value. So 20,000 into 1, right? And what is the share premium? What is the share premium? What is the share premium? It's 5,000. Okay. So this entry, just for your easiness, I have made the entry. In exam, you don't need to do everything. I am teaching you with scratch. That's why this entry has already been made. This entry has already been made. Can anybody tell me what are the opening balances now? This is closing. This is, my dear student, closing. So 120,000 is the closing ordinary share capital. 20,000 is the right issue. So the opening share capital must be 100,000. And now 5,000 is the closing share premium. 5,000 is the closing share premium. And see this entry. During the year, share premium increased by 5,000. So opening share premium must be 0. Opening share premium must be 0. Now the question is why I made all this entry, all these things, because I have to prepare a SOSHI. Because I have to prepare a SOSHI. Are you getting? Are you getting? And this entry will be posted in SOSHI. 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 Okay. So now we have done everything. We have done everything. My dear student, I'll be moving to the spreadsheet now. Just read the requirement. Read the requirement. Prepare a schedule of adjusted profit for the year ended 31st December X5. No issue. I'll prepare the adjusted profit because already there is a draft profit is given. Draft profit is given. I'll start from draft profit and I'll do plus minus some adjustment and then I'll calculate the revised adjusted profit. Don't worry, it's simple profit reconciliation. Simple profit reconciliation, 4 marks. Then prepare statement of change in equity right from the zero, 6 marks. Good score. Then C, prepare statement of financial position of Sphinx SOFP. SOFP, again good marks. Okay. Now I'm gonna move towards the Excel sheet, the spreadsheet. Okay. But what's the rule now? I won't be able to show you the question on the screen. I won't be able to show you the question on the screen. I have already sent you the question on WhatsApp group. One thing, still if you don't have, quickly take the picture. Quickly take the picture. If you don't have the question, quickly take the picture because many students will see this question on YouTube as well. Quickly take the picture of this as well. Quickly take the picture of this as well. And I beg you, don't forget what I have just taught. Don't forget what I have just taught because now I'm not going to re-explain you things. I have explained you everything. I have explained you everything in detail, please. Okay. So take the picture. If you want to take the picture of this trial balance, you can. Okay. So I'm moving towards the Excel sheet. First, my dear students, we need to do workings. You can see on the screen everything, all the headings are written ready-made. All the headings are written ready-made here. All the headings are written ready-made here, right? Okay. Why the headings are ready-made? Because to save your precious time. It's not my objective to teach you how to type. That's not, you are no more kids. You are no more newborn babies, right? But in the exam, you will get plain sheet. You will get plain sheet. You have to write all the headings yourself. All the headings you have to write yourself. Okay. So before we move on, first we need to do the workings. This is the first working we can do. This is the first working we can do. Okay. So what is the students? Now, this all I have taught you before. This all I have taught you in this question. What is the cost of land? What is the original cost of land? It was 50,000. It was 50,000. And what is the cost of building? The cost of building was, I think, 150,000, right? So these two things I have written. Then, sorry, I have written wrong. Sorry. Okay. Now, land is never depreciated. Yes, but building is depreciated. So already accumulated depreciation of building was 90. Can we calculate the NBV? Yes, it was 60. And this is just copy paste. Please don't write on the screen. Please don't write on the screen. Okay. So this is the, oh, sorry. Wait. Just one mistake. Sorry. Alignment. Really sorry. Okay. So 50 and 60. And let's bold it. Okay. Now, what is the fair value? Do you remember the combined fair value was 250,000? So fair value of land was 80,000. Fair value of land was 80 and fair value of building was 170,000. Can anybody tell me the revaluation increase? Yes, the difference between 80 and 50 is 30,000. And the difference between 170 and 60 is 110,000. Okay. The total revaluation came out to be 140. Now we have to calculate the depreciation. The new depreciation is only for building. The new depreciation is only for building, which is 170,000 divided by 20 years. It's 170,000, it's minus 170,000 divided by 20 years. So 8,500 is the depreciation. 8,500 is the depreciation. Okay. Now let's calculate the closing balance. For land, as land is never depreciated, at the year end, land will be recorded at 80,000. We have already done it. Please, we have already done it. Don't consider it as a new thing. And for building is 170 minus, sorry, let's make it plus because already in the negative sign. 161,500. So here you have the closing balance. Okay. Now, what about the plant and equipment? The plant and equipment original cost. The plant and equipment original cost was, I think, 320,000. The plant and equipment original cost was 320,000. Accumulated depreciation was 111,200, right? So the NBV should be 208,800. And now what is the depreciation rate? It's 15%. So equal minus this thing multiply by 0.15. It's going to be 31320, right? Let's calculate the NBV. Let's calculate the NBV for C. This is for plant. Can you tell me what is the total NBV which will go in the SOFP? Can you tell me what is the total SOFP? These three closing balances. Open your eyes. These three closing balances. Land, building, and plant. Land, building, and plant. These three will go in the SOFP. 481,980. 481,980. 481,980. Right? Now there are some extra things. We have already covered this. The extra thing is deferred tax. Listen, how much is deferred tax on revaluation increase? Deferred tax on revaluation increase. Should I tell you how much is the deferred tax? It will be, wait, let me show you the working. 110,000 plus 30,000, right? Bracket close, take the difference. This is 140,000 multiply by 20% is the deferred tax rate. 20% is the deferred tax rate. Okay. So if you calculate this, this will be equal to 28,000. 28,000 is the deferred tax. And now I'm not making the entry. So out of this 140,000 increase, 28,000 has been cancelled with deferred tax. So the remaining amount will go is 112,000 will go in 112,000. 112,000 will go in the SOSHI. 1,120 net amount will go in the SOSHI, as I have already explained you this. In using my pen in my iPad. Hope you remember. Then annual transfer entry. You remember your old depreciation was it was 150,000. It was 150,000 divided by 50 years, which was equal to 3,000. And the new depreciation was 8,500. So the difference is 5,500. Okay. So for this thing, you have to make entry revaluation reserve debit and retained earning credit. Revaluation reserve debit and retained earning credit. Okay. I hope you understood this. Because as this thing has already been explained to you. These things are already being explained to you using the iPad. Okay. Now the next adjustment was this foreign transaction. Remember this foreign transaction? It was 40 million dinars at 31st October X5. The rate was 10. So 40,000 divided by 10 is $4,000. Initially, your liability was $4,000. And at the year end, this 40,000 got changed. The exchange rate changed to 8. So this will be 40,000 divided by 8. 40,000 divided by 8 is how much? 40,000 divided by 8. Wait. 5,000. 5,000. This is, oh, sorry, I have written wrong. Wrong. Sorry, my bad. Initially, the rate was, I have copied wrong, sorry. Initially, the rate was 4 and then it changed to 5. So initially, it was 10,000 and then it moved to 8,000, right? So there is a gain, foreign exchange gain of 2,000. There is a foreign exchange gain of 2,000, right? No need to make the entry. I have already made you the entry or taught you with entry. But yes, if somebody wants to make the entry, still he or she can. But I won't make right now because I have already taught you. So this 2,000 exchange gain entry will be debit payable, debit current liability, credit P&L income. P&L income will go in the income statement. Next thing is accrued finance cost. Accrued, how much was the accrued finance cost? It was 30,000 loan times 7% times 7% times, wait, sorry, 7% times 6 divided by 12, right? So it was 1050. So what will be the entry for this 1050? The entry will be interest expense debit, and your current liability, that is accrued interest credit. Okay. So it will affect your income statement profit as well, and it will affect your current liability as well. Then you have share issue. Yes. So what's your number of shares at the year end? Your number of shares at the year end is 120,000. And right issue, how to calculate right issue? 120,000 was equivalent to 120%. So 120,000, sorry, equal 120,000 divided by 120 multiplied by 20. So this is the 20,000 shares, right? Shares, okay? So your share capital will be increased by 20,000 and share premium will be increased by 5,000. I hope you remember, because 20,000 multiplied by 1, share capital is always recorded at face value. Share capital is always recorded at face value. And the 1.25 minus 1.25 is the share premium. So it's 5,000. Okay. And now you can also write the opening balances. If you want to write the opening OSC will be 100,000. Opening OSC will be 100,000 and your opening share premium will be 0. Opening premium will be 0. Okay, it will be 0. So I have almost covered all adjustments. Now, from now we can directly go to the all first requirement, second requirement, and so on. We can directly, please don't write on the screen. Respected students, please don't write on the screen. Now we can directly go on to the main format. Okay. I hope you are understanding everything, because I have covered you everything on with pen and the paper, right? And that was very effective thing. So your first requirement is, let me make the screens. Yes. Your first requirement is profit reconciliation. So what is your profit? What is your draft profit figure? Go and check. It's 16645. It's, sorry. Okay. So your opening figure is, your draft profit is 166,450, 166,450. Okay. Now write down the depreciation. First, you have to write the depreciation of building. First, you have to write the depreciation of building. There is some alignment issue in my sheet. So the building depreciation I'll write with plant. Okay. So the building depreciation was 8,500. I'll write equals minus 8,500. And then you have the depreciation of plant and equipment is 31320. 31320. See, I have written both depreciation together. I have written both depreciation together because there is some alignment issue in my sheet. Okay, don't worry about it. Then there is a foreign exchange gain. There is a foreign exchange gain. There is a foreign exchange gain. Foreign exchange gain of 2,000. Foreign exchange gain of 2,000. It's an income. That's why a positive number. That's why a positive number, respected student. Then accrued finance cost. Accrued finance cost is 1,050. It's an expense, so I'll deduct 7. Okay. Then we have income tax expense. Two income tax expenses were there. First, it was under provision of 2,500. Definitely it's an expense, that's why deducted. And second, it was current year provision. Also, it's an expense, that's why deducted. So my dear student, finally, you can calculate the correct profit number. You can calculate the correct profit number, which is 95080. 95080 is your correct profit number. 95080 is your correct profit number. Okay. Okay, dear students. So this is your first 4 marks. It looks like that these 4 marks is just 1 minute. It's not 1 minute. We have to do workings for that. We have to do workings for that, right? The next thing is statement of changes in equity. Now let's take out the statement of changes in equity balances. Opening balances of share capital. The share capital opening balance was 100,000. Hope you remember 100,000. Then the share premium opening balance was 0. Share premium opening balance was 0, right? Then okay, then retained earning was there. Retained earning, go and check the question. You all have questions. You all have question. In the question, there is the opening retained earning in the trial balance is 158,150. 158,150, right? And there is no revaluation reserve. There is no revaluation reserve there. There is no revaluation reserve in the, there is no revaluation reserve there. Okay. So opening balance of revaluation reserve will be nil, 0. Now let's calculate the total. Let's calculate the total. It's 258,150. 258,150. Now hope you remember if you have taken the classes, you know, when I teach in the class, I teach with this style. What are the famous things which goes in Soshi? What are the famous things which goes in Soshi? Number one is right issue. Yes, right issue is there. So let's pose the right issue. In right issue, share capital increased by 20,000 and share premium increased by 5,000. Okay. So definitely the total will be 25,000. The total will be 25,000. Okay. Now so first thing is done. So right issue is there. We have done it. Then bonus issue. The second thing is bonus issue. Please don't write on the screen. I request, please don't write on the screen. The second thing is bonus issue. There is no bonus issue in the question. So ignore it. Yes, total comprehensive income is there. total comprehensive income is there. And what is total comprehensive income? It's profit plus revaluation reserve. It's profit plus revaluation reserve movement during the year. So what, profit goes, see, this is the profit. This is the profit. Profit goes in front of retained earning. Profit always comes in front of retained earnings. So let's pick it up. See, let's pick it up. And what is the revaluation reserve amount? Can you tell me what is the revaluation reserve amount net of deferred tax? Revaluation reserve amount net of deferred tax was 112,000. Hope you remember. So let's add on this side. Let's add on this side. Wait. Okay. Now there was a transfer entry. There was a transfer entry. 5,500 is added here and deducted from here. So the net impact will be 0. Net impact here will be 0, right? Okay. Next thing is, finally, there are no other transactions. There is no convertible loan notes issued during the year. No other transaction of Soshi, no ordinary dividends are there. So let's do the final total. Let's do the final total. It's going to be 120,000. Something is wrong. Wait, in my format. It's 120,000. Then you will have 5,000. Then you will have there is some formatting issue in my PC. Wait. There is some formatting issue. Still, don't worry about it. I'll send you the updated one, but right now let's total it. Then we'll have these, and finally, it's the total 490,230. The total is 490,230, 490,230. The hashtag is written here because there is some formatting issue. I'll send you the updated file once I'll send you the final file. Okay, don't worry about it. Now, this is your statement of changes in equity. This is your statement of changes in equity, statement of changes in equity, statement of changes in equity, right? Okay. Now, finally, we have to prepare SOFP. Finally, we have to prepare SOFP, my dear student. The first thing is property, plant, and equipment. The first thing is property, plant, and equipment. Yes, we did the, listen to me. We did the working for property, plant, and equipment just now. So let's pick it up the total number. Let's pick it up the total number of PPE. The total number for PPE is this 418980. Remember this working? This working we did. 418980. Then we have inventories. Inventories, go and check. Pick the ready-made inventory from the trial balance. The inventory is 115,000. 115,000. The inventory is 115,000, right? Then we have, somebody's writing on the screen. Please don't write. Listen. Then we have trade receivable. There is no adjustment of trade receivable in the question. Just simply write trade receivable from the question. It was 130,000. It was 130,000, right? Okay. Then you have total assets. Total assets figure, you can easily calculate. Total assets figure. Total asset will be how much? Total asset will be, let 663,980. Your total assets will be 663,980. Your total assets will be 663,980, right? Now, the next part is equities and liabilities. Equities and liabilities. Equities and liabilities. Okay. In equity and liability section, you just have to copy paste your SOSHI. You just have to copy paste your SOSHI. So your SOSHI share capital was 120,000. Your share capital was 120,000. Share premium was 5,000. Your retained earning is 258,730. 258,730. You can check it out, right? And your revaluation surplus was 106,500. 106,500. Okay. This is after deducting that 5,500. This is after deducting that 5,500, 5,500. Okay. So let's add your total equity. Let's see how much is. It's 490,230. Now, hope you remember you have one loan as well. See the trial balance. The original amount of loan was 30,000. The original amount of loan was 30,000, right? Okay. Then there was one deferred tax liability. Remember, I made the entry revaluation reserve debit 28,000 and DTL credit. Revaluation reserve in the starting I made this entry deferred tax on revaluation. So deferred tax liability, my dear student, is a non-current liability. It's a non-current liability. So there is a 28,000 non-current liability which will be posted in the SOFP, which will be posted in the SOFP, right? Next. Then we have current liabilities. Wait, in current liabilities, I must do some workings. What are the current liabilities? Original current liabilities. The original trade payable was 70,500. Wait, original trade payable was 70,500. Hope you remember there is a gain. There is a exchange gain entry of 2,000. So we made the entry trade payable debit and P&L credit. We made the entry trade payable debit and P&L credit. So see, we have to reduce our payable by 2,000. We need to reduce payable by 2,000. Okay. And then there was some accrued interest. There was some accrued interest of 1,050. There was some accrued interest of 1,050. So let's net it off. 7,500 minus 2,000 plus 1,050. It's 69,550. 69,550, right? Then hope you remember there was one current tax payable. Hope you remember there was some current tax payable of 30,000. Current year tax provision. Current year tax provision is always your current liability. Current year tax provision is always your current liability. Current year tax provision is always your current liability, my dear student. Then you have bank overdraft. Then you have bank overdraft is, I think, 16,200. Check the question. 16,200. Okay. So now let's finally see your total. Let's finally see your total. So it will be equal. What are the totals? Wait. We can simply apply the sum formula. This number, then the rest. See, it's 663980. Is 663980 is there. 663980 is there. So finally, we have balanced the SOFP. Finally, we have balanced the SOFP. You can see on the screen. We have balanced the SOFP. We can see on the screen. Somebody has written something. Please remove. Somebody has written something on the screen. Please remove. Okay. So we have completed, my dear students. My dear students, my respected students, we have completed this question. It's not difficult. It's just about practice. It's just about practice. See, if you count, we did IS 16, the most famous standard. IS 16 is the most famous standard we did, right? Then we have IS 12, little bit of IS 12, little bit of finance cost thing, which is normal thing, right? And then there was some IS 21 adjustment, not an advanced level, monetary, non-monetary, only they ask about the monetary items. Then the right issue is basically F3 things and taxation thing. So if you concentrate and if you work hard with focus, you can score really good. You can easily clear this paper. Just think this paper is connected. This paper is connected to your F3 level. F3 level. And normally, if I see many students have a very good background of financial accounting, because in your school and colleges days, still in your school and college day, you do financial accounting. So there are some students, they have been doing financial accounting for last 6 years, 5-6 years. So now it should not be an issue. It should not be an issue for you guys. It should not be an issue for you guys. Okay. So don't worry about it. And now